in-depth understanding of the stock market just like the pros. Well, thanks to Phil Grande and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence. It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Welcome to my podcast. Hi, I'm Phil Grande at philsgang.com. You know that people just don't believe the stock market's ever going to crash. They just don't. I've never seen anything like this. Think about it, 90% of the small retail investor loses money. They lose money, which is insane. That's impossible. I mean, it would think, how could that be? Because they don't get educated. That's why, because they listen to these dopes, especially on CNBC and Fox and all these stations, and they're looking for a hot stock. It doesn't work that way. So these AI stocks that go up every day, which, by the way, is not working. Listen to this. If you want to hear something that's so unbelievable, something that contradicts everything, listen to this here. So one day, here they're talking about how great the AI is, right? Listen to this.
The S&P 500 gained 0.6% on Wednesday, led higher by the bellwethers of the AI build-out. That would be NVIDIA, Broadcom, and AMD. A near-daily rush of huge new capital commitments and major chip orders have kept this theme in the lead.
Yeah, right. All exciting, right? Boy, yeah, kept the game in the lead. AI. Now listen to this.
The S&P 500 index fell 0.4% on Tuesday. Shares of Oracle shed more than 2% on a report by trade publication The Information that its AI data center hosting business has so far shown thin profit margins.
Oh, profit margins. Oh, bad profits. Yeah, this AI. But wait a minute. NVIDIA goes back up. It's doing terrific again.
The S&P 500 gained 0.4% on Monday with a huge boost from the 4% jump in NVIDIA after the chip company announced a $100 billion investment over time into OpenAI to develop data centers for AI training together.
Huge. Everything's okay again, but
The S&P 500 fell 0.5% on Tuesday, dragged down by 3% or somewhat greater declines in the shares of NVIDIA, Amazon, and Oracle. Scrutiny of NVIDIA's $100 billion deal with OpenAI, investing in the company, which would then recycle some of the money back to buy NVIDIA processors, raised some questions about the underpinnings of demand in the current phase of the aggressive AI build-out.
Yeah, but wait a minute. Everybody's happy again.
The S&P 500 gained 0.6% on Wednesday, led higher by the bellwethers of the AI build-out. That would be NVIDIA, Broadcom, and...
Isn't it amazing? So what keeps this market going is all they have to do is keep in front of the folks, in front of these investors, okay, the retail investor, just keep in front of them every day that AI or AI Open is going to do a deal with somebody else. First it's Oracle, then it's AMD, then they'll get somebody else, and somebody else, and somebody else. And then every day when this market goes down, the next day come back with some good news. And that's what they do. Every time there's news of, you know what, this AI may not be working. I mean, we're spending billions and billions of dollars, but we're not seeing any returns. Then the next day, boy, look at the returns we're seeing. Aren't they unbelievable? So the question is, again, how long can they keep this market going up? And 90% of people are going to lose money because they don't understand why the market's going up. They have no idea what a stock buyback is. They have no clue what it is. They don't understand what they're doing. All they know is they look at their 401k. And by the way, if you're looking at your 401k, that's another thing. You got to be pretty disappointed when you see every day these AI stocks going up. Every day the market goes up, right? Every day. And you look at your 401k, you go, what the hell's going on? My 401k isn't doing anything. Well, it's because the 401k is a failed experience. That's not coming from me. It's coming from the founder, Benna. And why is it failed? Because remember, the company and the 401k sponsor are partners. So when you are in a company, they offer you a 401k, there is a sponsor there. You don't know what the hell to pick out for a mutual fund. So they say, well, here, why don't you try this one? And what they do is they give you the worst one, the one that has the highest expenses. The highest expenses. Why? Because your company and the 401k sponsor are partners. So they sell you crap. They sell you stuff that's so expensive, big commissions, and they split it. They split it. So here you're getting screwed with your 401k because your company and your mutual fund sponsor are working against you. They're working for themselves. And overall, Wall Street, they work for themselves. There's not nice people on Wall Street. They're vicious people. But it was designed that way. Wall Street was designed to be vicious. You can make more, you got better odds of making money, okay, at a casino than you do Wall Street. Remember, the environment of Wall Street is to be vicious. You got the most amoral, the most vicious people on Wall Street. They put making money above everything else. There's no integrity. I mean, it's like, if you've ever been to Wall Street, these people are they're killers. I don't mean go out and shoot somebody, but they're financial killers. The environment is so toxic on Wall Street. There's so much competition. There's so much stress. Especially if you're in the business banking. Oh my God! If you're in the business bank, you're working probably 18 hours a day. Most of the time, you're sleeping maybe 2, 4, 5 hours because you got to meet these deadlines. You got to meet these goals, or you're out. They don't care about you. If you work for Goldman Sachs, they could care less about you. You work for JP Morgan, you're a nobody. You're a nothing. Only the guys at the top. They're like a pack of rats. They all take care of each other. So here we are in this toxic environment at Wall Street, and they keep pushing this AI, and think about how criminal these stock buybacks are. They entice people who don't know what they're doing. They target the retail investor who has no clue what he's doing. All he sees is that stock goes up every day. And he thinks, oh, it must be making money. It's got to be making money. That's why the stock's going up. Hey, I'm going to buy some more. And the broker says, boy, I got to get you some more, George. I'm going to do the best I can. It's hard to get you more of that stock. I'll call you back. Then he calls you back an hour later. Hey, you got lucky, man. I found you some more of this AI crap. Hey, I found it. Really? Yeah, oh, thanks, man. Then the guy calls his wife. Hey, can we ask George? I'm going to ask George to go golf with me. Can we have him over for dinner after that? He's a good guy. He bought us some more AI crap. They have no clue. They have no clue. The stock is going up because there's just less shares available. It's that simple. Think about that for a moment. These stocks are going up not because of profits, not even because of a good idea. There's just less of it. They buy their own shares. So there's not as many outstanding shares. So if you start out with 1 million shares and you bring it down to 500,000 shares, there's 500,000 less shares that can be traded. So the stock goes up. You don't need it. You could be losing money, but the stock will keep going up. It's just crazy what's going on. But if you know what you're doing, you won't be part of that 90% that loses money. Whether you're in a 401k or you're in a stock, you won't be part of that. You'll be set aside of that. The biggest insurance policy you have in the stock market is selling short. Selling short. I don't care if you sit there all day and say, oh, AI, but these stocks will never come down again. Nvidia will never come down again. Never, never, never. Apple will never come down again. Microsoft won't come down again. The semiconductors won't come down again, ever. And you can convince yourself of that and keep buying and buying. As long as you have that tool, that one tool that you know how to sell short. But there's another tool you need. How do you know What do you look for that will tip you off in advance that the market's breaking down? And you always get a tip off. The one thing about Mr. Market is not corrupt. Mr. Market, the bond market, is not corrupt. The bond market tells you the truth. What's corrupt is Wall Street. What's corrupt is Wall Street. You have people working on Wall Street that are just, again, they have no heart, no soul. They're amoral, they're vindictive, they're vicious. But that's how Wall Street was built. When they built Wall Street, that was the plan. Hey, let's build Wall Street. We got to find the most vindictive, vicious people we can find. We need to find people who just don't have a soul. They don't have a soul. Don't have a soul. I don't know if this is true or not, but there's one story that the CEO, what he used to do, he'd always go around, he'd get these puppies, he'd buy puppies. And he'd have a guy down at the end of the street. His house was up on a little hill, and then there was a road going down in front of it, so he could see the road clearly. And he'd have one of his guys, his caretakers, take a puppy out of the box and put him out on the road. It was a busy highway, and he knew the puppy would get killed. And he'd say to the guy on the porch that was looking for a job, they'd say to the guy on the porch looking for a job, "Oh my God, you see that poor puppy? Yeah, would you go down and pick him up, just throw him over there in the grass so nobody sees him?" And the people that went down picked him up by the tail and threw him in the grass he hired. Now, I don't know if this is true or not. If I had to guess, I'm saying it's 99.99999% true. Those are the guys they hired. Can you imagine? Imagine if that's a true story? I bet it is. I bet it is. So today the market's down. Tomorrow morning you wake up and the market will be up. Now, how can that happen? How can you be down 314 points? Let's say we close at 4 o'clock, down 314. How come overnight it opens up positive 35, 65? It's always the same numbers, 27, 35, or 65. How can that be? Every morning I just think it's green again because it's manipulated. It's manipulated. They buy index futures. So the plunger team, which is the president, which is the SEC, the chairman of the SEC, the chairman of the Federal Reserve, the president, and the chairman of the, I'm missing one, chairman of the Federal Reserve, what's the one, commission, the Commodity Commission. Commodities Future Commission. So what they do is they get together in the morning. So how much you want to show the futures are for the morning? Let's raise it. They always raise it the same. You go look. It'll be either 25, 37, or 65. Those three numbers. It's always up in the morning. Oh my God. So again, the problem that we have, with Wall Street is there's just no integrity. And you have a bigger chance of making money, I swear to God, going to a casino. But if you know what you're doing, what a difference it makes. If you understand how Wall Street works, if you understand how to follow the pricing, how to follow the money, what a difference it makes. Then it becomes real fun because you're making money, because it's going to be fun because you're going to know when the market's going to crash. Markets just don't crash. Everybody creates an illusion, the market's going to crash. We're going to wake up one morning, the market's going to be down 2,000 points. No, it doesn't work that way. It doesn't work that way. You always get messages from the market when it's going to crash. The first message you get from is the bond market. In the case we are in right now, the first message we're going to get is when we start seeing the amount of buyback start getting cut back. Yeah, we watch that every day for our students. And then what we watch is, with the stock buybacks, are the CEOs cutting back? The big one is the margin accounts. Are the margin accounts shrinking? And more people ask, hey, you got your margin account, I need a check from you. And they go, well, no, just sell my stocks. And once you start seeing that margin account where people are forced to sell their stock to meet their margin, they don't want to write a check, that's the crack. That's when you start selling short, right there. That's when you start selling short. And people look at selling short as like you're a criminal. It's like if you ever say, I think the market's going to crash at some point. You get stoned. If they could catch you outside your house, they would dig a hole, put you in it, just leave your head there, and they stone you to death. I mean, you say something about a crash and this kind of, you're like, you're not American. Oh my God, you're a communist. I mean, they go nuts. They don't want to hear that the stock market's going to crash. I mean, people are so crazy over every day the stock market going up. Every day stock market goes up. And if I just played you those 4 cuts. Look how phony it is. Every time it goes down, the next day they got a story why it's going back up. Goes down, the next day they got a story why it's going back up. It's crazy. Pension funds, mutual funds. I mean, just think of these big institutions. They know what they're doing. Why is it that they're dumping all these stocks? Pension funds, mutual funds, hedge funds, banks, insurance companies, all dumping these AI stocks. Why? Because they follow the money. That's what we teach. We'll be back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to my podcast. You notice the 10-year Treasury is still going up. We've had a few days, about a week, that the Treasury was going down. Remember I told you, don't believe it? I said these yields or interest rates are going to keep going up. And remember I kept telling you that. And I said, the idea of going down, I said, if you look at the trend tells you something else. Just because it was going down for a few days, it wasn't a trend. It wasn't a trend. And the other thing, you got to remember too, when yields go down, the dollar goes down. And that's not good. The dollar has been getting weaker and weaker. And the dollar keeps falling because we have a terrible, weak economic indicators. I mean, just think of the dollar, the purchasing power, how awful it is. Think about how the import prices, how high they are. I mean, we have no purchasing power. That's why everybody's shifting to gold, or one reason why they're shifting to gold. And that's why there's big worries about the recession. And when you got the yield falling, you got the dollar falling. And again, if you have bond yields, interest rates, rising, it used to be good for banks, but it's not good for banks anymore because banks have so many problems, right, with foreclosures and defaults. They don't want rates going up. They want them to come down. But again, when you have rising yields, that implies a correction. And I'm predicting that 10-year yield is going to go pretty close to 5% when we're done. But there's huge hedge fund money. They're pushing it down. But the problem with the hedge funds, they're losing the battle. And every time they lose the battle, they got to buy that short position back. So we're at 4.14. So I'll tell you what, if we get to, you don't even have to get to 4%. If we get to, and I'll give you a number right here. If we get to, this is when all hell's going to start breaking loose in the market. Is when we get to, let's see, we get to the high of, right there, of, what date was that? That was on the high of, 9/2/2025. The high was at 4.3. If we get to there, okay, you're going to see all hell break loose, because that is going to really tear up the financial markets. Okay, that's going to, imagine if yields go up like that on a 10-year Treasury, it's going to destroy housing. It's going to destroy credit cards. It's going to be unbelievable. It's not going to be good at all. So right now we have, people say you got to be diversified. Are you nuts? You want to diversify yourself? You diversify yourself right in the poorhouse. When I used to hear that, diversify, that is a fraud. You never diversify, okay? And I've always lived by, everyone says, well, no, I don't want to be diversified. I'm going to put all my eggs in one basket, and then I'm going to watch my basket. That's when you make money. Okay? Put all your eggs in one basket and watch them. Then you're not going to get hurt, as long as you have the skill to short. And it gets me so frustrated, because Wall Street works so hard to scare people to make sure they don't short stocks. Because Wall Street, remember, you don't have nice people on Wall Street, okay? You have evil people. And it's been designed that way. They want evil people, okay? They want people that are so sick that integrity, forget integrity, okay? I just want to make money. And that's how they think. They really do. They'll take their integrity and throw it out the window on Wall Street, okay? They're so tied into making money, their personality. I mean, they don't care about family. They don't care about country. I've worked with them. These people are just so evil. They're just nuts. So again, the other thing you got to start watching is your credit spreads. That's going to tell you also when the market's going to go down. And nobody's doing that. Nobody's talking about it. I watch the credit spreads. And when the credit spreads start widening, that means you're going to get a recession. So what that means is when a credit spread is going to widen, it just means people are going to buy more treasuries instead of corporate bonds. So if more people are buying high-yielding treasuries over lower corporate bonds, that means the credit spread is widening, okay? And that's not a good deal. But you got to keep watching the credit spreads. You want to see people buying more corporate bonds, okay? If they're buying, if they widen that, no, that's not good. So that's something you have to. There's so many things you can watch that tells you if the market's going to crash. It takes a long time for a market to crash. I mean, people just don't understand that. It takes a long time. I mean, there's so many things you can look at. It's really interesting, too. If you look at the wealth gap on Wall Street, the amount of people that are making money, I mean, really making money on Wall Street, it's tiny amount of people are making money. It's the same people, all with insider information. It's the top 1/100 of 1% and people in Congress who deal with the top 1/100%, who control the investment banks. They make it all the money. the only thing you can do to be a good trader is learn and convince yourself, I got to follow the money. If I can just follow the money with confidence. And if you do that, and if you follow money and you have confidence, okay, in that, in what you're doing, following the money, everything's going to be okay. Everything will be okay. But the problem is, most people, again, they don't know what to follow. All they do is turn on CNBC, and again, whatever they say, oh, it must be okay. What's Kramer saying? Buy this one, buy that one, right? It doesn't work like that. It just doesn't work like that. So taking a look at the stocks for a moment. Let's see if I can get my stock up here. Let's see, will he give me my page up here? I don't know where my page went. You got it? Yeah, hold on one second. Let me get my page up here and I'll go with it. So anyways, all these people, the one big reason, the fear of missing out, that's what's driving the market right now, the fear of missing out. You got all these investors, these tourist investors, okay, who are just, they're so fearful. They're buying every one of these tech stocks. So when you really look at the tech stocks, what you want to be following, let me show you what you want to be following. So a handful of stocks that you want to be following here. I'm going to get them for you right here. Okay, first of all, I follow every day as an ETF. I always follow the MAGs, of course, MAGS. I like following ARK. ARK tells me what all the young kids are doing, okay? It gives you the sentiment. ARK is a good indicator as to the real sentiment of the market, of the tech sector. Are they still crazy? Okay, are the kids in there really going crazy and buying all these AI stocks, don't know what they're doing? And as long as ARK keeps making new highs, the market's not going to crash. Same thing with SMH, the semiconductors, okay? It's so important. As long as the semis, all you do with that, like for example, SMH, go back to the nearest low point, which is, I think was around, if I'm right, was around September 24, okay? September 25th, I think it is. And if it takes that low out, then there's going to be a problem. But if it doesn't take that low out, then we're just going to keep going higher. Okay, so the whole market is based on SMH, ARKK, and the MAGs and XLK. If those four just keep going up, then the market's not going to crash anytime soon. I predict the market's going to crash in the first or second quarter of next year. Okay, that's what I see. The other thing too is the stocks that you want to also watch is right here. Let me find them for you. The stocks you want to start watching is your energy stocks. Everybody hates energy stocks right now, okay? Good time to start selling energy stocks short. If you look at XLE, the best place to sell that stock, if XLE drops just below, if it can just drop just below that, let's say that 80, about 84, right below that 85, right below that 85, just underneath it, like 84, 98, something in there. That'd be a great place to sell short your energy, okay? And then when you sell short your energy, and it's going to go down, okay, because the economy's getting worse, because the labor market's getting worse. When the labor market gets worse, that means manufacturing getting worse. And if manufacturing is getting worse, that means jobs are getting worse. That means no home construction. That's going to get worse. So everything just gets, that's happened with all the other crashes, okay? Just follow your energy. Your energy is a great indicator because when things are good, energy goes up. When things are really bad and you're heading to a recession, energy goes down. So keep watching your XLE. The one I like to watch the best is XOP because I was in the oil business. And XOP, it's all about, if you watch that, it's all about oil and gas exploration. That's the heart of the industry. And if XOP starts selling off and XLP takes out the 200-day moving average, okay, around 126, I think it is. Yeah, around 126. That's a very important one to watch, XOP. If we take that out, you take that out, and we all of us who were in the energy business, we watch XOP like a hawk. If that is taken out, that means the economy's in such terrible shape, okay? People have no money, there's no way they're spending, and you're going to hit a recession, a huge recession. So there's so many messages from the market. You can find out exactly. The best message, of course, is always your bond market. Okay, nothing like Mr. Bond. Mr. Bond, he will always tell you the truth. He doesn't screw around, and he's going to, he'll always tell you what's going on. The bond market will never mislead you. Okay, never mislead you. So, keep your eye on your bond market. Again, I want to bring it down to these tech stocks here again. If you look at, I'll tell you another one that's going to get hit hard, is if you look at XHB. If XHB breaks the 200-day moving average, and I've been watching, I'm waiting for that to hit the 200-day, then I'm going to have my gang short it. That's the builders. That's the ETF for the builders, okay? And with oil going down, I've been watching oil, the ETF for oil, and if you look at and put XOP or XLE, either one you want to use. Here we'll put XLE. It's right there. Hold on, XLE. You take XLE, your energy, or XOP if it's close by, XOP, either one of those, and you watch those, and you can see they're starting to sell off, especially your XLE. It just turned red today, okay? Look at your XLE. It just turned red. If that XLE breaks that 50-day and 200-day, if your XOP breaks that 50 and 200-day, those two right there, you're going to see XHB, the builders, collapse. That's going to go right through the 200-day moving average. So this is a fantastic trade. So watch your XOP. It's trying to break through the 50-day. Let it go through the 50 and 200. Let your XLE, it's ready to go through the 50 and 200. You don't need both of them. You just need one of them to get through both the 50 and the 200-day. When they go down, that's going to push your builders into the tank, and you're going to get one hell of a beautiful short. You'll be making a ton of money on XHB, but you got to get you need XLE, XOP, XLE to break the 200-day. Then your KBH will break, and boy, that thing will just tank. It'll be like a flying monkey. I mean, it'll just drop so bad. Okay, so that's the one you want to watch. That's a great indicator. So keep your eye on the bond market, because the bond market will never lie to you, always tells you the truth, right? And again, always keep your eye on your oil, because when manufacturing stops, and same with the dollar, okay, the dollar, as that dollar keeps on, that dollar's a real problem, because that dollar right now, I'm going to put it up for you here, UUP, put it up. Okay, UUP right now, you see how the dollar's going up? My gang members will tell you, I've been warning them about the dollar, how it's going up. That's going to take gold down. Listen to what I'm saying. It's going to take, we already have our gang taking more profits in our gold stock. We have a lot of money in GDX, our miners. I always like the miners better than gold. But GDX, and today GDX is starting to, GDX pulled back a little bit today. It's nothing I was short, that's for sure. I wouldn't short it yet. But if the dollar keeps going up, your GDX is going to pull back. If the dollar keeps going up, okay, it's going to drop that XOP and XLE right through their moving averages. I mean, we got such a setup that's coming for this market to get a correction. All right? Okay, join my gang. I'd be happy to help you. See you on the chart.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to